Hey everybody, it's Tiffany. Welcome back. I'm doing a special today on what portion of your scholarship might be taxable. So, yay, right? I just feel like there's a lot of students that don't know that part of your scholarship becomes taxable, so or may become taxable. So, congratulations, though. You've worked so hard to make this happen and to get a scholarship. Um, your school is paid for. What do you do now? Well, I'm gonna show you how to get through that a little bit in the most basic, easiest way I possibly can. Now, remember, I will always say talk to your tax professional because they know your situation. You may have different things that come into it. There may be a whole bunch of different variables that we don't cover in this. This is literally just the basics. So let's get started so you can see. Let's just pretend the cost of your tuition is $30,000 and then you spend $1,000 on books and supplies and your scholarship was $50,000. Now, yay, everything is paid for. Congrats. But let's see what happens with that. So, what does that scholarship cover? That's a trick question. It can pay for everything. So that 50,000 is obviously more than the books and the tuition. Most people are going to use that then to pay for room and board, right? Well, let's look at that. The non-taxable portion of the scholarship covers the tuition, the books, and the supplies. Okay, but room and board and travel home is not covered by that. That becomes taxable. Not that you just spend it on that, but basically anything over the tuition and the books. So let's do a little bit of math. Your scholarship was 50,000. So let's look at that. And your tuition was 30,000. And your books and supplies was 1,000. So your expenses that were allowed were 31,000. If you spent more than that because you paid for room and board and travel, that doesn't come into the math part at all. Okay, so your taxable scholarship income is now $19,000. So, are you taxed on all of that? No. There's a little bit more math, but we're going to take the taxable portion of your scholarship minus the standard deduction for your filing status. So, single, married filing joint, head of household, whatever that may be. And that's going to become your taxable income. For purposes of today, I'm just going to be using single filing status. Like I said, I'm keeping it the most basic. Now, here's the math. So you had $19,000 of, let's go back a slide, $19,000 of your taxable portion of your scholarship, right? We'll go back one more slide. This right here, the blue part, the taxable income was $19,000. Now we're going to take that $19,000 and we're going to subtract $13,850. Wait a minute, where did that come from? That is something called the standard deduction. So if you're single, that's the amount that you get, and everybody gets that that's single, that doesn't itemize. So that is just your standard deduction. So we're going to do the $19,000 that we came up with for your taxable portion of your scholarship minus your standard deduction. So what you're left with is this $5,150. That is now your taxable income. So we'll take that. We'll look at the tax tables. Now, tax tables say if your taxable income, remember this is just single, I'm just covering single. If your taxable income is over $0, but not over $11,000, then your tax rate or your tax bracket, because people still say tax bracket for all of this, is 10%. Now, the other three below that have asterisks next to them, there's a lot more to it, but that 10% becomes really important. So remember, we were at 5,150, so we're in that top little row right there because we're under 11,000. So 5,150, we're in the 10% tax rate. So we're going to go to the taxable income is 5,150 and we're going to multiply that by our tax rate of 10%. So we come up with $515. Now, again, the most basic scenario, the tax owed on the taxable portion of your scholarship in this completely made up example I just did would be $515. So, not too much, but how do you pay that? So you can either make estimated payments at any time during the year. They usually do quarterly, but because everything's online now, you can literally pay it anytime you want, or you can pay it with your tax return. Now, it may be more than $515. I'm just giving you very, very basic examples, but if it's more, like let's say $2,000 or something, you may owe a little bit of a penalty on that. So we hope not, and your tax preparer will try and do whatever we can to knock that down. You may not have a penalty at all if you wait, but that's just one other thing that you need to think about. And that right there is where you would pay. You go to irs.gov/payments. You can pay with debit or credit, but they charge you a percentage. If you pay just with your routing and account number, there is no additional fee. So, and IRS does not process its own payments with those debit and credit cards. That's why there's a fee. So you can do that. I don't want you to have to pay a fee. I want you to be able to set aside that amount. That's why I'm showing you this. So you can set that aside or pay it early if you can. And then what about your state? Now, every state is different, so you need to check with your tax advisor, your tax preparer. You probably will owe a little bit to state. So state tax rates are lower than federal, so in the general sense. So just know that there's probably going to be a little bit for state as well. All right, now here's the breakdown of everything. We're going to take your scholarship minus the book, supplies, and equipment. That equals your taxable scholarship minus the $13,850 if you're single. That becomes your taxable income. If your taxable income is less than $11,000 and you're single, put aside or pay at least 10% of that for federal taxes. All right, now I hope that was all helpful to you, and please share it with your fellow students, because I feel like students are never told this information. They don't expect to pay any tax at all. So please, please, please share it with your fellow students and your networks. All right, so let's get everyone so that they don't end up with a big surprise tax bill. Okay, thanks and have a great day. I'll see you guys later.